Hi Kevin, lovely to
Hi.
meet you, and thank you so much for your time today. I'd love to hear about what you're passionate about as far as investing and what your firm looks at.
Yeah, absolutely. Thanks for having me. I like that you use the word passion because I think that's how we kind of approach it. So I'm with iNovia Capital. We're a younger fund, like to call ourselves an emerging fund. And we're all former entrepreneurs and operators, so we very much kind of run like a startup and have that passion. We're seed Series A investors. We have about $300 million under management, and currently have about just over 40 portfolio companies, mainly in the areas of digital media, ad tech, e-commerce, enterprise SaaS, and we've started making some investments in around connected devices, hence why I'm here.
Fabulous. And
Perfect.
What's your personal passion, is there?
So my personal passion, I'm an engineer by training, and
Okay.
my grad school work was all around mechatronics, robotics, embedded systems. So I very much have a passion for connected devices, robotics. When I came out of grad school, I wanted nothing more than to join a startup in that area, but none of them existed. And now they do. So I'm fortunate to be able to spend a lot of my time on that. And I also have an operating background in digital media, so I've done a few investments in that as well, and then have a few enterprise SaaS companies as well.
Fabulous. And what was the journey that led you to be interested in being a venture capitalist? Everyone's got their own story, and I'm fascinated.
Mine's probably one of the oddest ones for sure.
Okay.
So I was a beekeeper for 10 years. And made the obvious transition into technology. The truth was, I'm from Canada originally, and it's very seasonal. Originally from northern Alberta, north of Edmonton.
I lived in Nelson in BC
Okay,
for about a year,
perfect.
about 10 years.
You bet have been to Nelson, beautiful place. So, yeah. So it was very seasonal with in agriculture up there, obviously, and so I did an engineering degree in the winter. And then I have an opportunity to come down to grad school down here at Stanford University, and it was within a few weeks of landing in the Silicon Valley that I just fell in love with it, and I made a very abrupt career path change away from the bees into technology, joined a startup, got into product and engineering, eventually took that startup over, did some seed investing, was going to move back to California to join another startup, and that's when I ended up meeting the partners at iNovia and joined a VC firm, which I did not see happening I always thought maybe one day I would end up there, but not until I was in my 40s or 50s. So, but it was kind of that startup culture of what they were trying to build that I just kind of fell in love with and joined, and it's been great since.
Fabulous. And I'm really interested in what's happening in the venture industry because I spend so much time interviewing all VCs and supporting female VCs. So, there's a few changes with the Jobs Act happening in crowdfunding, and also because I came from Europe originally after 13 years in Dublin and 2 years in London, I see that VC firms are springing up all over the place, and where it was so hard for me 8 years ago, now everything's much different. Obviously not the same as Silicon Valley, but really changing. And I'm wondering, they're just a couple of the changes that are affecting the industry. I'm wondering what your perception is of all these changes and where they're leading.
Yeah, you hit a couple good points there. I think one, when I left the Silicon Valley for a few years and went back to Canada, I swore I would never join a VC fund outside of the Silicon Valley because I thought they just had a different vibe to them down here, and I just thought they were on the right track. Well, you see there's a lot popping up. I agree there's kind of a decentralization going on where I don't think it matters really where you are. We've chose to be a distributed team. We have offices in Montreal, Calgary, New York. Yet don't have offices down here yet, but we're here a lot. Haven't felt the need to really. And there's a real decentralization where you can start startups pretty much anywhere now. There's definitely some that have to be here. Any large scale consumer internet company, mobile, I think has to be here. But you see a lot of the biggest SaaS companies around all over the place. You've got everything from MailChimp in Atlanta to ExactTarget in Indianapolis. You look at e-commerce, you got Wayfair in Boston. Obviously the biggest one of all, Amazon, is in Seattle. We're investors at Beyond the Rack in Montreal, which is one of the biggest flash sale sites out there. So there's not a real kind of core kind of hub like there was even 10, 15 years ago, where if you want to start an internet company, you had to be here because that's the only place you could find people who understood how to get that up and going. The cloud has really enabled a lot of that decentralization. In addition to that, I agree there's kind of firms popping up, but overall there's actually a contraction in the industry going on right now. I think what we're seeing is more of kind of it's referred to as the barbell effect, where we're seeing these mega funds that have had a lot of success, kind of $1 billion funds plus, and then we're seeing all these smaller ones, and a lot of them are new and emerging. We would be in that category. But in the middle, kind of between $250 million to $750 million, $1 billion, those ones are all kind of dying. And it's just a result of just pretty much the decreasing cost of startups. It doesn't cost as much money. 10, 15 years ago to start a web-based internet company, you're looking at millions of dollars for hardware, servers. Now, if you've got a laptop, you can have a company for a couple $1,000, for the first year running on Amazon's cloud. So a lot of changes. VC definitely ran, in a very kind of single fashion for 30, 40 years, but I think we've seen a massive evolution in the industry. And just lastly, one of the biggest evolutions has been the kind of switch where the entrepreneur essentially holds all the cards now. 10, 15 years ago, the way it worked was entrepreneurs would crawl into the gold-plated offices of the VCs, beg for money. Nowadays, the successful funds are the ones where the partners are out, beating the pavement, meeting the entrepreneurs, being out in their neck of the woods and selling themselves. So we've seen a complete flip in the industry, which I think is exciting.
Sort of the prettiest girl at the party, but
no, not at all. There's tons of transparency now across the industry. Entrepreneurs have more choices than ever, including not to raise capital with things like crowdfunding their product for pre-sales or pre-orders. So it's there's a lot of change going on right now.
So I guess what I'm hearing is that probably the ramifications of that are the ones that are willing to roll with the punches and change and innovate, as is the startup world, are the ones that are going to survive these changes, you think?
Yeah, I agree.
Do well.
I agree to a certain point. There's still, the large branded funds that have been around for a long time, that had tons of success and can still attract the top deal flow. I don't think that's going to change. Okay. We're seeing these new emerging ones, which you're kind of referring to. They're generally not run by bankers like it was in the late 90s, or they're former entrepreneurs, operators, engineers. And they're building these new funds with new approaches and kind of the entrepreneurial friendly kind of platform. So I think what we're seeing is kind of all the ones in the middle that are both, that size I mentioned before, and then also kind of, tier 2, tier 3 funds that are really struggling if they're not adapting to the change in the ecosystem.
Interesting. And I can't help myself. I have to ask about Canada because I've had, because of living there, and I keep having connections, and I recently interviewed the Canadian minister when he came down for the Thai conference about
Jason Kenney. So I was actually with him on that trip.
Oh, really?
Yeah.
That was about the new immigration policy.
Startup visa.
That's right.
Yeah.
And I said, that's so cool, that you're going to support the startups. But the feedback I was getting from entrepreneurs in Canada through social media was that a lot of the venture capital firms are very conservative, and it's harder for entrepreneurs for them to get entrepreneurs and startups and the whole risk thing. And I guess that's sort of a Canadian trademark, that they'd be a little bit hesitant. What's your observation? Do you see changes happening up there?
I do, and it's very ironic you asked that question. I actually just put up a blog post on our site at iNovia.vc on exactly that issue in Canada. It's titled Risk Tolerance. And I think there's I want to be careful what I say out of respect to everyone up there. I learned this business down here and kind of brought that back with me. They don't fit in. One of the problems we have in Canada is there's not a lot of funds. We're very small, and it really isn't a separate ecosystem. We're part of America. There's no border, and that's how we have to look at it. A lot of Canadian entrepreneurs, number one, I don't think not having a lot of funds around and not being able to talk to a lot. Right here when you're in the Valley, you can go down and talk to 50 funds in a week. In Canada, you can't talk to more than 1 or 2 in any city. So you don't get that kind of feedback. So, Canadian entrepreneur talks to their local investors, they're not interested, and then they say, well, Canadian VCs don't have any risk, right? I can't speak for all the funds. For ourselves, over half of our investments we've done in Canada have been pre-revenue, very, very early stage seed. So if that ain't risky, I don't know what is. And I think the other point, which I kind of pointed to in my blog post, is that there are certain companies that are just going to be very hard to get funded outside of the Silicon Valley or maybe New York. Consumer startups, internet, when you come with this big idea that you're going to be the next Facebook, that's really hard to get funded when you're in Toronto or something like that. It's even hard to get funded here. But it's just kind of a realization, I think, that any center outside of these areas, it isn't a Canada problem. It'd be no different in Iowa or Oklahoma or something like that. So it's something I'm pretty passionate about, and I get a little worked up sometimes when I hear that. And a lot of times when you get Canadian entrepreneurs that kind of have that stance, and you send them down to the Valley, and they come back with a very different tune. So it's just part of the education process, I think. And just lastly, I think Canadian entrepreneurs have to know that they don't have to talk to a Canadian investor. Like, they should be down here talking to the American ones too.
Yes.
You look at companies like Pandora. They said they talked to like 285 funds, so they finally got investment. Well, there's maybe 10 funds in Canada. So if all you're doing is talking to the Canadian ones, you got to take just a wider, broader, exactly, limiting your chances to raise capital.
Look, absolutely delightful to meet you and talk to you. Thank you so much for your time.
Yeah, really appreciate it.
Okay.
Thank you.
Thanks, Kevin.